Hi guys, it's Ian from OSB FX and this is your weekly market wrap. What I want to talk about in this video is obviously what has happened last week. Very volatile markets. A friend of mine has actually said to me, Trump has made FX great again. We're getting some large movements in the currencies, in particular the DXY, which is the dollar index, and correlated products. We had the tariffs on Wednesday. That caused counter tariffs, more volatility, and then obviously non-farm payroll on Friday. Mixed bag of figures on Friday, but stock indices still continued their move to the downside. Next week, I'm sure we're going to get continued volatility, or there is a possibility that we will see a period of consolidation after such aggressive moves. We've got the FOMC minutes on Wednesday, and then we've got US inflation data on Thursday. So we could see a stalling in price action at the beginning of the week. What I want to do in this video is focus firstly on DXY, which is the dollar index. Then we want to look at correlated products. We're going to have an emphasis with regards to the US 30, which is the Dow Jones, and also the US 100, which is the Nasdaq. Quite important chart patterns have formed. So I look at cipher patterns, which are basically made from fib levels, so a little bit like Elliott Wave theory, but they do highlight where we should see exhaustion points. If you've been watching previous videos, we've been talking about CD legs, so that's the last leg in these patterns. A lot of these patterns have now completed, so there is scope for reversals. I'm a swing trader, so I'm not looking really at intraday charts. What I'm looking for is large swings in the market, and I believe we're getting up to those points now. So let's get to the charts. Like I said, the first chart that I want to look at is the DXY, which is the dollar index, and this is basically the time frame that I'm looking at. What I should explain actually before we go forward is just what we can see on the chart here. This bottom right hand corner is the hourly chart, middle, bottom, monthly, and then going anti-clockwise we've got weekly, daily, 8 hour. That should actually be the 4 hour chart. I do go down to shorter time frames to trigger trade plans, but for my focus, for my analytical view, if you like, and I look at these time frames. And what I would say as well is that I've taken a lot of oscillators or indicators off these charts, so I would actually call these vanilla charts, so it's just annotations that are really on them at the moment. DXY daily. Okay, so we've seen this very aggressive move to the downside, okay, but we've hit this confluence zone. The confluence zone is between 101.15, which is a 261.8% extension level of this leg, this AB leg, and then we've got 100.96, which is an 88.6% pullback level. That has formed what's known as a bat formation. Okay, it's a bullish formation. What I do like about this is it's sort of a double whammy. So we've not just got a cipher pattern completing. What we have also got is an Elliott Wave formation. So wave 1, wave 2, wave 3 and 4, and then wave 5 to the downside. What can we see here? Well, we can see a reversal. Is it a reversal or is it a correction? Well, to me at the moment it's still a correction. Why is it a correction? But basically because we've had such a strong sell-off, even though we've had a decent bounce to the upside on Friday, this is an inside candle. Okay, it's inside Thursday's range, and that highlights indecision. What I also haven't got yet is a decent reversal formation at the base. So what there is scope to happen next week, and again probably a period of consolidation Monday, Tuesday, up to Wednesday FOMC, even possibly up to Thursday. The scope for just inside bars, okay, and that will cause a lot of intraday volatility. You remember this sort of Thursday range, if you look back, it's one of the biggest ranges that we've had for some time, so there's ample scope to hold within that range. I've also put this on here, 3 cycles. So what I do look at in swing trading is obviously cycle analysis, and that says that really the change in sentiment, because this was the first change in sentiment up here on the 13th of January, the change in sentiment shouldn't really happen till around about the 11th of April, so sort of going into the latter point of next week. So yeah, ample scope for consolidation, but as a swing trader, my bias is now focused to the upside with regards to DXY and the dollar index. So let's reflect that back onto various different products. We're also going to look at euro, dollar, sterling dollar, dollar yen. That's a sort of two time frame analytical view at the moment. It could possibly go either way. And gold, I believe, is quite important. Oil, we've seen a very strong sell-off, and then I want to look at the US 30, the Nasdaq, and the DAX 40 or the Germany 40 if you're spread betting. So let's get to those charts. So euro against the US dollar, we've been annotating this obviously quite aggressively lately. I just want to highlight this time frame first. This is the 4-hour time frame, and we can see here that we broke out of the ending wedge formation. Now this to me looks like we're still in the 4th wave. So 1, 2, I can see this impulsive move up. It could just be 3, 4, so we could just spike higher to make a 5th wave. What I like to see at the end of a bullish or bearish Elliott Wave completion is either a head and shoulders pattern, which is common, and sometimes an ending wedge pattern. Now, an ending wedge pattern has a 70% chance of working. So, as a trader, we're always looking for percentages, or we're looking for a bias that's going to work in our favour. So 70% is up there. Okay. Do I see an ending wedge formation? Do I see a head and shoulders pattern? I do not. So I believe there's still scope that we could just see a move higher to take out some weak stop losses as well. I mean, when we talk about smart money concepts and theories like that, there's going to be a lot of stop losses placed above last week's swing high. So there is scope just to go up, take them out, and then possibly move to the downside. Sterling dollar. Oh no, hold on 1 second. Most important chart. So basically a reflection, or a -1 correlated reflection of DXY is the euro against the US dollar. And we can see the back formation here on 1.1105. We've completed it. It's the same as DXY. What do we have? Yeah, we got some decent follow through selling, but this is still an inside bar from Friday. And in fact, it's virtually contained to the upper half of Thursday's range, and that highlights that this sell-off really isn't very aggressive as yet. So a few sort of warning signs here that we could just see that spike to the upside, if you like, in early trade. Sterling dollar, a more aggressive move to the downside. The back formation completed at 1.3210. What was the swing high? Let's have a quick look. The swing high was at 1.3208. So it's pretty accurate with regards to get the confluence area there. What I do see on the 1 hour chart, and I think everybody else should be able to see this as well, pretty simple pattern. You can even sort of guess where the fib level is going to be coming in there. Is a 261.8% extension level. So this is sort of saying to me, yes, the sequence has switched. Okay, we've gone from going higher highs and higher lows. We've hit medium term 261.8% extension level. What I like to see is when we get a switch in sentiment, is that we go from a 5-wave count to the upside to a 5-wave count to the downside. And we can clearly see that here. So wave 1, wave 2, cross in 3, up in 4, and then down in 5. What happens after 5 waves? Well, we get a correction to the upside. So again, even though the medium-term bias is switched, we should now see a correction to the upside. So that would say to me that the dollar, if sterling against the US dollar is moving higher, then surely that dollar index has got to move lower, possibly form that double bottom formation that we're talking about. I'll be looking for a cipher pattern here to confirm a top. So, something like this, or perhaps this, which is a Gartley formation. Move, please. Something along this lines. So, again, when we're looking at time scale, look at the bottom of the chart. Where are we moving into? 7th, 8th, possibly, the 9th of April, which is obviously getting into those data releases later in the week. Dollar yen, stock indices are still moving lower. That's driving this currency pair to the downside. This is my medium-term focus, which is the completion of the Gartley formation. That's between 143.68 and 143.07. We've seen a good correction to the upside. We've even broken through the previous swing low, so what was support at 14654 then became resistance. We've broken that upside barrier. If we go to a shorter time frame, I can't remember which one I've got it on. It's this one here. We've hit a 261.8% fib, but again, there's no clear indication of a medium-term swing trend change here. Easy for me to say. So I'm still expecting some downward move, but Nasdaq, when we get there, US 30 when we get there, DAX when we get there, they're highlighting, or they've hit some key levels, so we could see a period of consolidation. So again, intraday trading is likely to be quite mixed and volatile going into next week. Going to move quickly through the others. Aussie dollar has hit the measured move target, so this is the daily chart. It's hit the measured move target, which was down here around about 60.80 from the wedge pattern. Again, talking about wedge patterns, 70% chance of hitting the target. Aggressive move to the downside. Probably see a period of consolidation now in that product. Sterling yen, again, looking at 2 time frames here, we had the wedge breakout. 188.80 was the measured move target. That's been achieved. We had the reverse trend line, which acted quite nice as a trigger level, if you like. A lot of the time when we get these wedge breakouts, they will be retested. So you get the impulse move to the upside, then the correction can be seen as a second wave in an Elliott Wave formation, and then we get the impulse move to the downside. Again, why do I think we could see a period of consolidation? Well, if we look to the 1 hour chart, this to me looks like wave 1, wave 2, possibly 3, 4 here, and then coming down to the 261.8% extension level around about 186.74, and then a period of consolidation. Dollar CAD, again, has it achieved its short-term target? We've got a 261.8% extension level here, 140.81. I'd expect it now to move to the downside and then stall in the periods this week. I mean, dollar Swiss is quite interesting. Really aggressive move lower. It's a safe haven product. So what we're doing, we're selling the dollar. DXY has been moving lower, so this has been driven by DXY, but it's also been driven by safe haven status. So traders looking to buy the Swiss franc as a safe haven. So really an aggressive move to the downside in dollar Swiss. What do I see here? There's a great book out there called Trade What You See, and I like the title and the content, to be perfectly honest. Don't try and look for things that aren't there. What I see here is the potential to make an ascending triangle pattern. Okay, 88.6% is a big level for cipher pattern formations. I can't see a completed cipher pattern, but it is sort of giving warning signs here that this sell-off could potentially be exhausted after getting very close to this 88.6% fib. So I'll be wary if I was a seller of dollars or a seller of dollar Swiss. I think even if we get down to this sort of trendline support, we'll then get a period of consolidation. When we look at Nasdaq US 30 again, that will become a little bit clearer with regards to risk on, risk off. Gold, everybody's favourite at the moment. The swing trade for me is, you've got to be looking for a topping pattern. Would have been very painful on an intraday basis. There is no clear confirmation of a change of trend as yet. That was the monthly chart, by the way. The daily chart highlights a bearish outside candle. Okay, that candle formation is often seen at the top of a trend and the start of a new downward bias. Have we got a fib level? Not really. 361.8% is up here, around about 3,224. So Elliott Wave analysis sort of suggests that there's a possibility of further gains. But when we look at this inside wave pattern, 1, 2, 3, 4, 5, have we completed the upside story, if you like? But if we get down to the 1 hour chart, this to me looks like a Gartley pattern. It's a little bit disjointed, but this would suggest actually that we can see another move to the upside. So the swing trade is lower. Now, like I said at the start of this video, DXY is confusing at the moment. It's not given a strong buy signal, and because of that, I'm wary that we can see continued upward pressure in gold, because it is -1 correlated with regards to DXY in the 10-year. So just take care if you're in this trend and you're expecting a strong continuation to the downside. I think it's got scope to correct higher. US 30, a really aggressive move to the downside. Get rid of that because that got broken. Okay, we have got a 261.8% fib here. We've still got this gap open. Okay, gaps have a tendency to be closed, so we need a decent correction to the upside. Most important chart is this chart, which is the Nasdaq 100. So the medium term, you've got to try and understand if you're trading counter trend or trend. Okay, the medium term trend is clearly to the downside. Okay, we've broken out of this wedge formation. It's got a measured move target a lot lower. We've completed, as far as Elliott Wave is concerned, the first wave structure, so wave 1, wave 2. We've got a 161.8% fib at 17,195. We've got a previous swing low at 17,248. There is ample scope for a correction to the upside, or at least some consolidation, some profit taking going into next week. Do I expect a trend reversal? No, I don't expect a trend reversal, because last week's candle is so strong. What I'm expecting for this week is an inside bar. So just coming up, holding within last week's range before we then see another move to the downside. But it is a warning sign that we could see, like I said, a period of consolidation. And then DAX, the black line here is my bespoke support and resistance levels. Aggressive move to the downside. Again, we've left a gap open. No clear indication of a change of trend, but we've got a 261.8% extension level. That's located at 19,500. We've got bespoke support located at 19,568. So for the moment, DAX 40, Germany 40, looks bearish, but the downside again could be limited. So just to highlight what we've talked about in this video, DXY has completed the back formation, expecting a period of consolidation, choppy intraday trading at the start of this week. What I want to see, and what I'd like to see, and what will trigger my long trades is the potential of a double bottom formation in DXY or DXY products, or when we're looking at something like cable, sterling against the US dollar, I'm looking for that cipher pattern formation to complete on a shorter time frame to confirm that that base, that top, is in place. With regards to indices, we could now see a period of consolidation going into data releases. Okay, I hope that all makes sense. I hope that's given you some insight into my thoughts going into next week. Take care, and I'll be back soon with some more analysis. Many thanks.